talk about some important global stories coming out this morning. And let's kickstart our coverage this morning with action from central banks, because after the FOMC, you have the Bank of England that sets aside hawkishness as it expects to hold rates, holds rates at 16-year high of 5.25%. Members voted 8-1 to keep rates on hold. In addition, Governor Bailey expressed that they cannot start cutting rates yet, but also acknowledged that circumstances are progressing in a favorable direction.
And let's stay with central banks then. The Swiss counterpart becomes the first bank to cut interest rates. The Swiss National Bank surprised Street with a decision to lower policy rate by 0.25 percentage points to 1.5%. The SNB said that Swiss economic growth is likely to remain modest in the coming quarters, with the GDP poised to expand by roughly 1% this year. Diverging from the popular view to ease policy, it was Turkey's central bank that raised interest rates, the one-week repurchase rate from 45% to 50%, and citing the continuing need to counter climbing inflation in the country.
Well, let's talk about some stock-specific action, and Accenture is in focus because the company has lowered its revenue forecast for full year 2024, citing economic uncertainty and reduced client spending on consulting services. The company now anticipates a full year revenue growth within the range of 1 to 3%, down from its earlier projection of 2 to 5%. Now, this development is closely watched as Accenture's performance often serves as a benchmark for the Indian IT industry as well, providing insight into expected outcomes for Indian IT companies. Well, let me go across to my colleague Somit to find out what's going to be the impact of this on the Indian IT sector. Take it away, Somit.
Well, if you see yesterday in trade, Accenture share prices were down around 9% after the company reported its Q2 earnings. So what was so negative in the earnings? Firstly, they had downgraded their sales growth guidance for FY24 to 1 to 3% from the earlier given guidance of 2 to 5%, and this guidance was in constant currency terms. Also, they revised their FY24 EBIT margin to the lower end of the earlier guided range. Earlier guided range was around 15.5 to 15.7, and this now stands revised to only 15.5%. So, what would be the impact of this on the Indian IT companies? Now, guidance cut implies that there's a delay in demand pickup in expectations from the second quarter of FY25. Earlier, analysts in Street was expecting that Indian IT companies would see demand pick up from the second quarter of FY25. Now this seems to be delayed. Also, Accenture highlighted further cuts in short cycle discretionary projects. Now this is kind of negative for companies like Wipro, LTI Mindtree, Mphasis and Infosys. However, despite the cut, outsourcing segment is still expected to grow higher than mid-single digit during the second half of financial year FY25, which augurs well for the Indian IT companies. Also, do remember that given the fact that now this guidance has been lowered, many analysts are expecting that large IT companies may start the FY25 with a cautious guidance. But does the 9% fall that we have seen in Accenture share prices warrant similar kind of downtick in Indian IT companies? Well, it might not so happen given the fact that excluding yesterday's fall, if you see, Accenture has continuously outperformed the Nifty IT index. In the last 1 year, Accenture share prices are up nearly 48%, while the Nifty IT index was up just 27%. In the last 6 months, Accenture share prices are up 22%, while the Nifty IT index is just up 9%. And year to date, Accenture is up 8%, while Nifty IT index is up just 0.7%. So the 9% fall in Accenture was also one of the reasons also behind this 9% fall is the fact that Accenture share prices have outperformed by a big margin of late. Also, if you see the valuations of the Nifty IT companies, they are either below or largely at par with their 5-year averages currently.
Thanks, Amit, for that update on Accenture. But shifting focus right back to equity markets, where the Nikkei surpassed the 41,000 levels to scale a fresh all-time high. Moves followed Japan's accelerated inflation print for the month of February. Country's headline inflation rate for February came in at 2.8%, climbing from the 2.2% seen earlier. Core inflation came in at 2.8% versus 2% in the previous month.
Well, centering focus to some stock-specific action again then, shares of athletic footwear and apparel maker Nike took a beating after the company's China sales continued on the downtrend in the holiday quarter. However, the retailer beat both top and bottom line estimates, largely led by better than expected North American growth and price changes. Meanwhile, American logistics giant FedEx narrowed fiscal 2024 profit forecast as cost cuts take hold and share buybacks help offset less business from its largest customer, the US Postal Service. Shares jumped 13% in extended trading after operating margin in its largest unit rose 2.5% on a year-on-year basis.
And finally, social media giant Reddit received a red-hot street debut. Shares jumped a stellar 48%. The stock opened at $47, marking a 70% increase at its peak intraday. At close, the company got a market cap of about $9.5 billion. Remember, this was first IPO for a social media major since Pinterest hit the market in 2019. Reddit's listing is testing investor appetite for new tech stocks after an extended dry spell for IPOs.
Well, alright, with that, viewers.
If you like this video, then like, share and subscribe to ET Now.